Hey everyone, welcome back to Corporate Decoder. Today, Universal Health Services UHS just filed its quarterly report, and I am seeing some interesting trends in healthcare revenue and expenses. Quick note, this is not financial advice, just my take on public filings for educational purposes. While profits are up slightly, the company is facing some significant cost increases and some major legal battles that could shape its future. Universal Health Services Incorporated, or UHS, a major player in the healthcare and medical care facilities sector, has just released its quarterly report for the period ending the 30th of June 2026. This filing gives us a look at how the company is performing in the first half of the year, and it is painting a picture of both growth and increasing challenges. Let's dive into the financials for the second quarter of 2026. Universal Health Services brought in over $4.6 billion in net revenues. That is a nice jump from about $4.2 billion in the same period last year, showing an increase of 8.3%. Looking at the first 6 months of the year, revenues are even stronger, reaching over $9.1 billion, up 8.9% compared to the first half of 2025. This revenue growth seems to be driven by both their acute care hospitals and their behavioral health services, with same facility revenues seeing a solid increase. But here is where the story gets a bit more complex. While revenues are climbing, so are the costs, salaries, wages, and benefits jumped by 6.4% in the first half of the year, reaching over $4.2 billion. This is a significant expense, making up nearly half of their total operating charges. The company mentions staffing shortages and inflationary pressures as key drivers here, which is a common theme across many industries right now. Other operating expenses also saw a notable increase, going up by 15% in the first 6 months of 2026 to over $2.6 billion. This category includes a lot of different costs, and the company points to increases in physician expenses and medical costs, especially for their commercial insurance business. Despite these rising costs, the company managed to grow its income from operations. For the first 6 months of 2026, income from operations reached over $1 billion, an increase of 6% compared to the same period in 2025. This shows that they are doing a decent job of managing the increases in expenses relative to the revenue growth. When we look at the bottom line, net income attributable to UHS for the first 6 months of 2026 was over $707 million, up 5.5% from 2025. The effective tax rate remained relatively stable at around 23.7%. Now, let's look at the balance sheet. The company's assets have grown, with property and equipment valued at over $13.8 billion as of June 2026. However, they also carry significant debt, with long-term debt at over $4 billion. This filing also details some major risks and ongoing legal battles that investors should definitely be aware of. The company is involved in several significant lawsuits, most notably the Cumberland Hospital litigation. This is a serious issue involving allegations of inappropriate sexual contact. A jury initially awarded a massive amount in damages, which has since been reduced by the court. However, there are still many more plaintiffs involved, and multiple trials are expected over the next few years. The company is facing potential financial impacts if these cases exhaust their insurance coverage, which could seriously hurt their results. This case alone highlights the inherent risks in the healthcare industry. Looking ahead, Universal Health Services announced in March 2026 an agreement to acquire Talkspace Incorporated, a virtual behavioral healthcare company, for about $835 million. This deal is expected to close in the third quarter of 2026 and is being financed through additional borrowings. While this acquisition could expand their reach in the digital health space, it also adds to their debt burden and carries integration risks. The company also highlights the potential impact of the One Big Beautiful Bill Act, passed in July 2025. This legislation introduces significant changes to Medicaid programs, including work requirements and limits on provider taxes. Universal Health Services estimates this could reduce their annual net benefit from various Medicaid supplemental payment programs by as much as $500 million by 2032. This is a major headwind that could impact their future revenues. When we break down revenues by segment, both acute care hospital services and behavioral healthcare services are showing growth. Acute care revenues on a same facility basis increased by 8.2% in the second quarter, while behavioral health revenues saw a 7.4% jump. This demonstrates the company's ability to grow its core business. However, in behavioral health, salaries, wages, and benefits as a percentage of net revenue increased to 52.8%, indicating that labor costs are a significant and growing challenge in this segment. So, what does this all mean? Universal Health Services is a large, established company that continues to grow its top line, both through existing operations and strategic acquisitions like Talkspace. They are also managing the rising costs of labour and supplies reasonably well, keeping income from operations growing. However, the company is not without its risks. The legal proceedings, particularly the Cumberland Hospital case, represent a significant potential financial exposure. Furthermore, changes in healthcare legislation like the OBRA could have a material impact on their revenue streams from government programs. The increasing reliance on debt to fund growth also warrants attention. The biggest concern I am watching is how the company will navigate these increasing labour costs and the potential impact of healthcare policy changes on their substantial Medicaid revenue. They need to prove they can absorb these pressures while successfully integrating acquisitions. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you like this analysis, please hit that like button, subscribe for more, and join our Discord community linked below.